Hello. Welcome back to Secure Your Benefits. Today, we're going to take a deep dive into something very important for anyone counting on Social Security for retirement income: how Social Security benefits are taxed differently depending on the state you live in. This topic can really affect how much money you actually get to keep, so understanding it fully is key to making smart retirement decisions. Many people know that Social Security benefits can be taxed at the federal level, but fewer realize that state taxation rules vary widely. Some states don't tax Social Security benefits at all, while others tax them fully or partially. If you're in the process of planning your retirement or thinking about relocating, knowing your state's tax rules on Social Security benefits can make a big difference. First, let's review the federal tax rules briefly. As of 2025, federal tax treatment of Social Security benefits hasn't changed significantly from previous years. Up to 85% of your Social Security benefits can be taxable federally, depending on your total income. The key number here is your combined income, which is your adjusted gross income plus non-taxable interest plus half of your Social Security benefits. If you file as an individual and your combined income is between $25,000 and $34,000, you might pay federal taxes on up to 50% of your benefits. If your combined income exceeds $34,000, up to 85% of your benefits could be taxed. For married couples filing jointly, these thresholds are higher, between $32,000 and $44,000 for the 50% taxation level and above $44,000 for the 85% level. These are federal rules, and they apply everywhere in the U.S., regardless of your state of residence. But here's where it gets interesting: states have their own tax rules on Social Security benefits, and those rules vary a lot. As of 2025, 37 states and the District of Columbia do not tax Social Security benefits at all. This means if you live in these states, your Social Security income is completely exempt from state income tax. Popular retirement states such as Florida, Texas, Nevada, Washington, and Wyoming are in this group, making them very attractive for retirees who want to minimize their tax burden. Conversely, there are 13 states that do tax Social Security benefits, although the amount and method of taxation differ. Some states tax Social Security as ordinary income with no special exemption, while others provide partial exemptions or deductions. For example, take Colorado. Colorado taxes Social Security benefits but provides a retirement income exclusion. For taxpayers aged 55 and older, the state allows an exclusion of up to $20,000 of retirement income, which includes Social Security benefits. This means that many retirees in Colorado end up paying little or no state tax on their Social Security benefits, depending on their income levels. Montana also taxes Social Security benefits but offers a significant retirement income deduction for people over 65. This can reduce the taxable amount of Social Security benefits and other retirement income substantially, which helps retirees save money on state taxes. On the flip side, states like Vermont and West Virginia fully tax Social Security benefits as regular income. Retirees in these states may face a higher tax bill on their Social Security benefits than in states with exemptions. This can be an important factor to consider if you plan to retire in those areas or currently live there. It's also worth noting that some states tax Social Security benefits but provide tax credits that reduce the overall tax burden. For example, Minnesota taxes Social Security benefits but offers a special credit for senior citizens to offset some of the tax impact. Besides direct taxation on Social Security benefits, some states' overall tax structures impact retirees in other ways. For example, states might exempt Social Security but tax pensions, IRA distributions, and 401(k) withdrawals heavily. Others might tax Social Security but offer generous exemptions on other retirement income. So, the best state for you depends not only on how Social Security is taxed but also on how the state taxes other forms of retirement income. It's important to remember that state tax rules can and do change. Recently, some states have updated their tax codes to become more retiree-friendly or, in some cases, less so. For example, Illinois increased its retirement income exemption in 2025, making it easier for Social Security recipients to reduce their taxable income. Meanwhile, other states have held steady but continue reviewing tax policies as demographics shift and budget needs evolve. So, what does all this mean for you? If you're nearing retirement and can choose where to live, picking a state that doesn't tax Social Security benefits can stretch your retirement dollars further. States like Florida, Nevada, and Texas often top the lists for retiree-friendly tax environments. Living in these states means your Social Security income won't be chipped away by state taxes, and combined with no state income tax at all, that's a significant benefit. But of course, taxes aren't the only consideration. You have to think about cost of living, quality of healthcare, climate, family ties, and other lifestyle factors. Some states that tax Social Security may offer other advantages that outweigh the tax burden. If you're already retired or locked into your current state, don't worry. There are still strategies you can use to manage your tax burden. For instance, you can plan the timing of distributions from IRAs and 401(k)s to avoid pushing your combined income into higher tax brackets. Tax credits and deductions available at the state level may also help. Another thing to consider is that Social Security benefits themselves are only part of your retirement income. Many retirees also have pensions, savings, investments, and part-time income, all of which influence how much tax they pay. A comprehensive retirement plan considers all these factors, especially when it comes to state taxes. In fact, working with a financial advisor or tax professional who understands your state's specific tax laws can help you create a tailored plan. They can analyze your total income, determine how much of your Social Security benefits will be taxed federally and by your state, and suggest strategies to minimize those taxes legally. Let me share a quick example. Imagine two retirees, both receiving $30,000 annually in Social Security benefits. One lives in Florida, where there is no state income tax, so none of their benefits are taxed at the state level. The other lives in Vermont, which taxes Social Security fully. Even if their federal tax bill is similar, the Vermont resident might pay an additional $1,500 or more annually in state taxes just on those benefits. Over a decade or more, that difference adds up to a substantial amount. On the other hand, someone living in Colorado might pay some state tax on their benefits but can exclude a large portion due to the state's retirement income exemption. That lowers their tax burden significantly compared to a state with no such exclusions. These variations make it clear why understanding state taxation of Social Security is so important for retirees. To summarize, Social Security benefits are treated differently depending on the state you live in. While federal taxation depends on your total income, your state's approach to taxing Social Security benefits varies widely. As of 2025, 37 states do not tax these benefits at all, providing significant relief for retirees, while 13 states tax them either fully or partially, sometimes offering exemptions or credits. Always keep an eye on your own state's laws because tax codes can change. Make sure you have a clear understanding of how your Social Security benefits will be taxed both federally and by your state before making major financial or relocation decisions. Here on Secure Your Benefits, we're dedicated to keeping you informed about these important details, so you can plan confidently and keep more of your hard-earned money. If you found this video helpful, please hit the like button and subscribe for more updates and tips on Social Security and retirement planning. Thank you for watching, and remember, knowing how your benefits are taxed is one of the smartest moves you can make to secure your financial future. Until next time, take care and plan smart.